Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined this week by my colleague, Ben Rains. And we've got two Zacks number one ranked strong buy stocks for you, as always. And if you want to see these top stocks, be sure to subscribe to our YouTube channel. Go to zacks.com/YouTube to get all of our videos, including this one every week. But I'm bringing you one of the hotter stocks that's out there right now, and it's got the rising earnings estimates. That's why it's got the strong buy recommendation. What has both of those things right now? The gold miners. And my gold miner is Agnico Eagle. Those of you who are in the gold miners know this one well. Its ticker is AEM. It's from Canada. So it's got operations globally, and it's one of the bigger gold miners. That's why I like it. And let's take a look at why we have the Zacks number one rank. What is happening with the gold miners as gold hits new all-time highs? Although this week it's pulling back a little bit off those highs, but anything over $3,000 an ounce is very high for these gold miners. They are mostly seeing all-in costs at $1,500 an ounce or less. And Agnico, let me look. Did I write it down? I didn't write it down, but it's below $1,500. So everything above that is gravy. What are they doing with all that money? They are giving it back in dividends, and they're doing share buybacks. So on May 1st, Agnico said that they have confirmed with the Toronto Stock Exchange and the Canadian regulators that they are going to be able to renew their share buyback plan. And they have $1 billion share buyback plan still in effect. And this is a key component of their shareholder friendly type of philosophy. They've got that dividend, which they have paid a dividend every year since 1983. So they are very committed to both of those things. The dividend right now is yielding only 1.4% because the shares are soaring. But let's take a look on Zacks.com at what is going on with those earnings estimates now that gold is above $3,000 an ounce, and why the analysts are so bullish. So you can see we've got the Zacks number one rank. It's only got the B on the VGM, but some of that is because the shares have surged and are now, near all-time highs. It's got the D for value, but the shares aren't that stretched on a PE basis, trading at 19.5 times with the earnings estimates rising. So they've got a PEG of just around 1. And remember, a PEG ratio of 1 or under is value. That means it's got both value and growth. This is hanging out right around 1. So I'm still liking that on the PEG side. And as we scroll down, you can see 2025 revenue expected to be up 23%. That's quite large for a miner. And then we have the earnings side up 42% this year, up to 601 from last year, just 423. Next year, a little bit of gains sitting there, but no one really knows. And it's too early to know what gold prices are going to be at. So scrolling down, we can see 2 estimates higher in the last 7 days. We had 5 higher in the last 30. Nobody's cutting in the last 7 days, although we did have 2 cuts in the last 30 days. That's probably analysts who are maybe a little too bullish and kind of course correcting there. But we've got 1 higher and 1 lower for 2026. But again, it's a little too early to really know anything from 2026. I like to look at the price and consensus chart, of course, to see what's really going there with the earnings. And you can see back here, gold, much lower pricing. And so the earnings not really doing much until 2024 when it really started to take off. We hit those new highs, and now here we have again in 2025. These gold miners are cyclical, so you would expect the shares to be high when these earnings are at new records and you have the record with the gold prices. But even anything just in above 2,500 gets you back down here to these levels in 2024 with the earnings. But right now we are holding above 3,000. So this is all just extra gravy. For last quarter, for the first quarter, it did make free cash flow of $594 million. And it is almost net debt positive. It has only about $5 million in net debt. And so that's a good thing as these quarters keep rolling in with this great free cash flow. But remember, with the gold miners, you've got to get it out of the ground. Some of them have had execution issues. There's geopolitical risks. There's labor issues. There's a lot of things that can go on with the gold miners. So that comes into play. But again, Agnico Eagle has been around for a long time with solid management in play. They've all been waiting for this moment since the 1970s into 1980, the last high with gold. That's a long time to be waiting for this turnaround in their business, but it's here. I'm liking all the gold stocks. Several RZAC's number one ranks right now. Agnico Eagle is one of them. So I'm going to turn it over to Ben, who does not have a gold miner, with his number one strong buy stock.
Thanks, Tracy. Hello, everybody. Ben Rains here for this section of the top stock picks of the week at Zacks. Today, I'm looking at Sprouts Farmers Market, Inc., which trades in the ticker SFM. The specialty grocery company has ripped 20% higher in 2025 as part of a 500% surge over the last 3 years. Despite its charge and its tariff-ignoring year-to-date climb, Sprouts Farmers Market stock is not overheated from a technical standpoint, and its growth outlook is really robust. Plus, its upward earnings revisions have gone straight up over the last few years, including after its big beat and raise Q1 release at the end of April. So let's dig into a little bit more of the stock, and then I'll kind of jump into its earnings outlook and more of that section of the video today. So Sprouts Farmers Market is a somewhat under the radar specialty grocery powerhouse. I've actually never been to one. There's not many locations in the Chicagoland area. So it's a Phoenix headquartered company that operates roughly 440 stores across 24 states, with a big chunk of those locations scattered across California, Texas, Arizona, Florida, and Colorado. So some key growth markets there as well. It's known for its fresh, natural, and organic food offerings, which are mainstays among higher income consumers who are less impacted by economic cycles. On top of that, its essential shopping is often the last thing that consumers cut back on, kind of across all walks of life under various financial periods. So booms, busts, all that. The firm is also focused on driving innovation and boosting e-commerce and expanding its higher margin private labels segment while maintaining attractive pricing. Its pricing is nothing like Whole Foods. It's actually relatively competitively priced. And on the e-commerce front, it's rolled out a bunch of partnerships with Uber Eats and DoorDash and Instacart, helping boost its digital revenue by 37% recently. Its management, it's also focused on maximizing efficiency in the notoriously cutthroat grocery business, with over 85% of its stores located within 250 miles of a distribution center. With this backdrop in mind, the company grew its sales by 13% in 2024, with comps up nearly 8%, and it grew its adjusted earnings by 50% last year. Most recently, as I mentioned up top, its Q1 sales were up 19%, and its comps were up nearly 12%, 11.7% comps growth, with adjusted earnings up 61%. So starting the year really strong after a big booming 2024. And it also raised its guidance once again. So we're just going to start quickly by going on sproutsfarmersmarket.com for anybody who hasn't been into these stores. As I said, it's big and it's private label, so that Sprouts Farmers Market brand is where a lot of that growth is coming from. So just worth getting a sense that it has a lot of like healthy focus options, which could become more of a focus for a lot of people going forward for various reasons. And as I said, a lot of people who are in that mindset already have become kind of staples shoppers of Sprouts Farmers Market. And as I said, they're expanding in really key locations. So just worth quickly looking at their website and getting a sense of what they sell and how they're standing out in the competitive grocery businesses. As we mentioned, their growth has been really impressive. So we see that it lands a Zacks rank number one strong buy here at the moment. The stock did fade a little bit on Monday as the rest of the market bounced, but that's because it's been up so big that investors are kind of, while everything else is falling in 2025, Sprouts Farmers Market was surging, so investors are kind of taking some of those profits. As we mentioned, it posted a big beat raise quarter at the end of last month. So we can see it beat by 17% in Q1 as part of a 17% average beat over the last 4 quarters. And its earnings revisions have continued to go straight up since then. So we can see that since that, it's gone up from $4.66 to $4.95 to now $5.01 for 2025. And its most accurate estimate is coming in above that as well. So they all look similar for 2026. And then I'll go to a different section for some more earnings estimate, like revisions that we've seen that trend just go straight up. But for here, we can see we're calling for 14% revenue growth in 2025 and another 11% revenue growth next year. So to continue its booming top line expansion, calling for 34% adjusted earnings growth in 2025 and another 12% next year on top of that big 2024. And then we can go here, we can check out this chart. This shows kind of where its earnings revisions have gone recently. And we can see, as I said, sort of starting at early 2024, its revisions are going, these blue dotted lines are going just straight up. So we can see 2026 since the start of the year has gone straight up along with 2025. So those earnings revisions are trending heavily in the right direction. And on top of that, this is just a little bit different view of the same chart. You can see earnings revisions going straight up. This is percentage-wise, the fact that it's continuing to trend higher and higher for Sprouts Farmers Market. And here we can see that, as I said, the stock kind of found some resistance when it tried to break above to all-time highs earlier this month. So early May, it tried to break above and it found some resistance there. And now it looks like it's trying to find some support again at that 50-day moving average, which is a positive sign. And then if we put in the relative strength indicator, we can see that the stock has gone from way over bought to down closer to below neutral. And if it gets down to roughly this 30 line, that's when it's considered heavily oversold. So as everything else is shooting back up, it's kind of having a little bit of a pullback, setting up investors with a longer term and near term outlook to possibly consider buying into SFM stock right here at the moment. And then we can go here and take a look. And this is our estimates for comps growth overall for 2025. So we're calling for nearly 7% comparable store sales growth in 2025 on top of roughly 8% growth the year before that. So we can see that these 2 years look way better than 2023 and 2022. So the company is clearly doing a great job drawing in customers and maintaining its customers at those stores and being able to kind of raise its prices alongside inflation. So that's a really great sign for Sprouts Farmers Market, both in the near term and the long run. Sprouts is also growing its cash flow at an impressive rate. Its strong cash position is helping it self-fund nearly $200 million in capital expenditures and rewarding shareholders through buybacks. Obviously, no company is immune from the tariff wars, even though that's cooling down in the backdrop of all this. But Sprouts is making a case for why investors should buy it for both near-term safety and long-term upside. So that does it for me in this episode of the Top Stock Picks at Zacks. Please head over to our Zacks.com/promo page for a look into some of our services, portfolios, and more.